My New Year's get-rich-quick plan is to put a lot of my money into Greek stocks. I'm backing up the truck, or in Greece's case, perhaps the boat. My plan has three justifications. One, the stocks are cheap, low multiples of earnings for profitable companies. Two, Greece will not leave the Eurozone. The Greek people, according to polls, don't seem to want to. And three, Syriza, if they come to power, will tack to the center from their currently radical left position, just like all radical parties do when they get into power. How rich am I going to get doing this?
That would have been a very good New Year's plan in 2012, 2013, maybe not so much for 2014 when things blew up. But what you've just described to me, Rob, is that value investing?
I suppose that depends what you mean by value investing.
Yeah, because you're saying, well, you know, the low multiples on something like, I don't know, like the airline, Asian Airlines, or the telecom, or the gambling monopoly, or whatever. They all seem like kind of very robust companies which have survived years of economic collapse.
Yes.
And so, and one definition of value investing is those fundamentals should make it a successful investment, whatever happens.
Right. And if the new government goes out and demands big haircuts,
that's where we go wrong, because now you're talking about political risk.
Yeah.
Which
so
is,
they go to the Europeans and they say, look, we're just not paying back at face value, right? That would seem to me to be bad news for
European creditors.
European creditors.
But
why is it bad news? Why is it bad news?
I mean, that's perfectly fair, because if you just look at the European official creditors, Greece's debt to them is as big as its GDP.
Right.
And that's not talking about the private bondholders or the IMF or others. So yeah, sure, if you clear the debt, that takes a big hangover off the economy.
So where's the risk?
But it's also those official creditors are still lending money to Greece, so it can go on sort of paying its debts.
Right.
I mean, it may be appealing that Greece has a primary surplus, which means that its budget is balanced apart from interest payments. So again, all grist to the mill of an economy in recovery.
But when those loan payments stop coming into Greece,
that's when the mechanism for a potential Euro exit begins, and that's why the election later this month is pretty much going to be a referendum on staying in the Euro, because if the official money stops, the European Central Bank decides, Greece isn't in an adjustment program anymore, therefore it won't accept collateral from Greek banks. The national central bank in Greece becomes quite limited in what it can sort of lend to those banks, and so a liquidity crisis can begin very quickly. And suddenly, all those companies you mentioned with fantastic fundamentals, you have to start thinking, how are their balance sheets going to be affected by a potential change of currency?
So the moral of the story is my get-rich-quick plan is a punt on politics, not on profits.
Yeah, and it may work, but you have to bear that in mind.
Thanks, Joseph.